Investment in Korean startups dropped by 77% in the first quarter of this year, down to KRW 775.7 billion from KRW 3.44 trillion in the same period last year, 2022. This represents a 46% decrease compared to the same period in 2021. The decline in investment began in the first quarter of last year and has been on a downward trajectory since then. During the beginning of 2022, over KRW 1 trillion was being invested per month, while the first quarter of 2023 saw a total investment of less than KRW 1 trillion, highlighting the extent of the decline. Notably, growth stage investments have been hit particularly hard. Investments above KRW 50 billion are now difficult to find, and no company raised more than KRW 100 billion in the first quarter of this year. Only 24 companies raised over KRW 10 billion, a figure more than 3 times lower than in the same quarter last year. The largest funder in Q1 was Cream, which raised KRW 50.6 billion, a significant decrease from the previous year's Q1 when the largest funder raised KRW 175 billion. Consumer tech companies received the most funding by sector, followed by software and bio/healthcare. Sector preferences remained relatively consistent between high and low investment years. Startups in fashion and luxury goods dominated the consumer tech space, but the amount invested per company significantly decreased due to valuations dropping. For instance, Ably Corp, expected to become a unicorn, raised KRW 67 billion in the pre-series C stage in January last year, but only received a venture debt of KRW 50 billion in an additional round in March this year. The debt nature of the funding is not considered favorable for startups. B2B SaaS startups were preferred in the software space, while growing industries such as space, robotics, and semiconductors remained underfunded. Despite the overall decline in investment, semiconductor fabless company Padu emerged as a unicorn. This suggests that investors remain interested in companies with high growth potential despite the challenging investment environment. This year, there has been news of startup restructuring, with some companies closing or being sold due to poor management. Some of these companies were potential unicorns, but this downturn is seen as an opportunity to improve the corporate body and identify promising companies for future investment. Thank you for watching, and more information can be found on the StartupRecipe website.